So imagine for a second that you run like this massive manufacturing empire, right?
Yeah.
And electricity is just by far your absolute biggest line item expense. I mean, every single month you're writing these just staggering, eye-watering checks to some, foreign-owned utility conglomerate just to keep your production lines moving.
Yeah, that's going to eat into your margins pretty fast.
Exactly. At a certain point, looking at those margins, you'd probably start sketching out plans to just, build your own power plant.
Take control of the supply.
Exactly. And today we are doing a deep dive into a $10 billion infrastructure mega deal that is essentially doing exactly that. But, and here's the catch, instead of electricity, we are talking about the future of artificial intelligence.
Yeah, it is a huge, huge shift in the landscape.
It really is. We've got a fascinating stack of sources today to help us figure this out. We're pulling from official press releases, financial breakdowns in Insight Success Magazine and Business Korea, and also a very, let's say, cautious set of Wall Street analyst reports.
Cautious is definitely the right word for it.
For sure. So the mission today, okay, let's unpack this. We want to figure out why NVIDIA, literally the most valuable chip maker on Earth, is suddenly dropping $1 billion to buy a piece of its own customer.
Right. South Korea's internet giant,
Yeah.
Naver.
Exactly.
And, I mean, it's a move that completely redefines the relationship between hardware suppliers and, well, software platforms.
Mm-hmm.
And the market recognized the gravity of it instantly.
Yeah. Didn't the stock just go crazy?
It did. The moment the news broke, Naver's stock surged 10% in a single day.
Wow. 10% for a company that size is massive.
It really is. But this isn't just a traditional portfolio diversification play for NVIDIA. The entire structure of this deal is anchored to a concept called sovereign AI.
Sovereign AI.
Right, yeah. And understanding how this transaction was actually engineered tells us so much about where the global tech economy is actually heading.
Well, let's break down the actual financial engineering here first, because looking at Naver's corporate history, I mean, they simply do not let outsiders onto their cap table like this.
No, they really don't.
Right. So NVIDIA is acquiring a 4.5% stake. How exactly did they structure that buy-in without just, totally blowing up Naver's share price?
Well, they executed what's known as a third-party allotment. So NVIDIA is purchasing roughly 7.2 million newly issued shares directly from Naver.
Okay, newly issued.
Yeah, and they priced it at 240,500 Korean won per share, which, hovers right around 140 US dollars.
Got it.
And that pricing was highly strategic, actually. It represented a really narrow, just a 1% discount to the market price right before the deal was finalized.
But wait, issuing 7.2 million brand new shares, doesn't that usually set off alarm bells for existing investors? Because of dilution, right? Suddenly everyone's slice of the pie just gets a little bit smaller.
Normally, yes, absolutely.
Yes.
But Naver pulled a fascinating lever to counter that. It's actually a masterclass in corporate governance, really.
Oh, really? What did they do?
So, to completely neutralize that dilution risk for their current shareholders, Naver announced the cancellation of 4.9 million of their own treasury shares.
Wait, they just canceled them?
Yep, effective August 3rd. We are talking about erasing roughly $1 trillion worth of stock directly from the board.
Wow, just poof, gone.
Basically, yeah. By shrinking the total float while issuing the new shares to NVIDIA, they maintain that crucial earning per share balance. And the historical context here is just wild, too.
How so?
Naver hasn't issued shares to a third-party strategic partner in 22 years. Not since they moved to the KOSPI index back in 2008.
That is insane, which instantly vaults NVIDIA into the position of Naver's third largest shareholder, right?
Right.
Sitting only behind, I think it's the South Korean National Pension Service and BlackRock.
Exactly.
That is a very heavy seat at the table. But, I want to circle back to that core motivation you mentioned a minute ago, sovereign AI. Because if I'm looking at this through the lens of national infrastructure, it's kind of like a country deciding they can't rely on a foreign grid for their electricity.
That's a really good way to think about it, actually.
Right. But with AI, it's not just about keeping the lights on. It's about ensuring the underlying intelligence of your digital economy actually understands your culture, your laws, and, well, your language, rather than just relying on a translated version of some Silicon Valley worldview.
Yes, and that is the core tension driving this entire market right now. The U.S. hyperscalers, the Amazons, Microsofts, Googles, they've essentially established a virtual monopoly on the infrastructure required to train these massive models.
Right, because they have all the compute.
Exactly. But a large language model that's trained primarily on English data and steeped in American cultural norms and copyright laws is inherently going to carry biases.
Right, it doesn't know how things work in other countries.
Right. So if you deploy that model in Seoul to handle, say, government logistics or legal document processing or even just domestic search here, it's going to hallucinate or completely misinterpret crucial cultural nuances.
That makes total sense.
So sovereign AI is really just the realization that nations need to own the infrastructure that produces their intelligence. They need data residency to stay within their borders, and they need models that reflect their own society.
And Naver is arguably the most credible non-US player in this specific arena. I mean, they aren't just a search engine. They actually develop their own large language model, HyperILV-SX, which is heavily specialized in Korean.
Exactly. What's fascinating here is that Naver is so uniquely positioned for this.
Yeah, so for NVIDIA, if they want to prove that sovereign AI isn't just a marketing buzzword, Naver is basically the perfect sandbox.
Oh, totally.
But a sandbox of this scale requires insane capital expenditure. We're talking about $10 billion. And that isn't going toward software development. It's going toward concrete, steel, and a terrifying amount of power.
Yeah, the physical footprint of this deal is staggering. The capital is being funneled directly into GAK Sejong.
Right, Naver's hyperscale data center in South Korea.
Right. And the expansion blueprint they're working with pushes the boundaries of modern electrical engineering. Like, currently, GAK Sejong operates with a power capacity of 55 megawatts.
Which is already huge.
It is. But the roadmap funded by this partnership scales that up to 200 megawatts by 2028. And the ultimate long-term vision is to transform the site into a 1 gigawatt facility.
Okay, let's just pause on that 200 megawatt figure for a second, because in the context of enterprise infrastructure, that is a jaw-dropping power draw.
It's massive.
You're talking about the electrical consumption of a small city just to run a single facility. Logistically, what does 200 megawatts of compute density actually allow Naver to build?
Well, it allows them to house and cool roughly 100,000 next-generation NVIDIA GPUs.
100,000, wow.
Yeah, and the cooling aspect is critical here. When you start racking up NVIDIA's Vera Rubin and Blackwell architectures, the thermal density is just extreme. You aren't just blowing air around anymore. You are engineering advanced liquid cooling systems across vast server halls.
Right, because they run so hot.
Exactly. They are implementing the full-stack NVIDIA DSX platform, which is engineered from the ground up to optimize the throughput of AI processing.
But wait, I want to challenge the terminology the sources keep using here. They repeatedly refer to GX Sejong as an AI factory, not a data center. But, I mean, isn't that just a marketing rebrand for a server farm?
You'd think so, but it's actually a fundamental architectural shift.
Really? How so?
So the era of the traditional data center was defined by data retrieval. You built massive facilities to store photos, databases, video files, and the servers acted like librarians. You asked for a file, and they fetched it.
Right, it's mostly just sitting there until you need it.
Exactly. It was passive storage. But an AI factory is an active manufacturing plant. It consumes raw data and raw electricity, and it continuously manufactures artificial intelligence in the form of tokens.
Oh, wow.
Yeah, it is an engine of constant computation running training runs and inference models 24/7. So the hardware required for an AI factory is structurally very different from a traditional cloud storage facility.
Okay, that makes a lot of sense. It's a forge, not a warehouse.
Yes, exactly.
And what Never is forging is where the software synergy between these two companies really shines. And here's where it gets really interesting. Never isn't just buying off-the-shelf NVIDIA hardware and calling it a day.
No, not at all.
They're deeply integrating their proprietary data with NVIDIA's foundational software frameworks.
Yeah, it's a highly symbiotic technical exchange. Never is bringing their HyperCelo VAX model and their massive repository of localized data, and they are advancing it using NVIDIA's Nemotron 3 ultra-open models.
Which is a huge deal.
It is. Naver actually became the first Korean company to join the NVIDIA Nemotron coalition.
Yeah.
They are collaborating on everything from the initial pre-training of the models all the way through the reinforcement learning phases.
And looking at the project roadmap, they are branching out into some pretty wild spatial computing initiatives, too. Like, they announced something called the Soul World model.
Right, yes.
It sounds like they are taking Naver's proprietary Street View and mapping data, plugging it into NVIDIA's Cosmos platform, and rendering this hyper-realistic, physics-based digital twin of the entire city.
Which is incredible, but that kind of spatial computing requires an immense amount of localized processing power. which actually brings up a fascinating secondary economic effect of this entire build-out.
Oh, like what?
Well, you can't operate 100,000 cutting-edge GPUs in isolation. They require a massive bandwidth of memory just to shuttle the data back and forth to the processor.
Right, high bandwidth memory, or HBM, which is practically the lifeblood of these AI clusters.
Exactly. And South Korea just happens to dominate the global supply of HBM through giants like SK Hynix and Samsung Electronics.
Yeah, I see where you're going with this.
Yeah. By building a 200-megawatt AI factory on South Korean soil, Naver and NVIDIA are generating this massive, guaranteed demand for domestic semiconductor components. It essentially creates a closed-loop technological ecosystem that supercharges the entire South Korean tech sector.
Wow, so it's a brilliant geopolitical play for Korea too. But reading through the analyst reports in our stack, it's pretty obvious NVIDIA and Naver are looking far beyond just the Korean peninsula.
Oh, absolutely.
This entire setup at GK Sejong is essentially a proof-of-concept showroom. And that brings us to the third major player in this $10 billion equation. Because, wait, NVIDIA only put up $1 billion, right?
Right. The heavy lifting for the actual infrastructure financing is coming from Brookfield Asset Management.
The Canadian alternative investment firm.
Yes. Brookfield signed a preliminary term sheet indicating they are ready to inject up to $9 billion in project financing to scale GK Sejong and future sites.
$9 billion. That's wild.
And Brookfield is a heavyweight here.
Yeah.
I mean, they already manage around $100 billion in AI infrastructure assets globally. They are heavily invested in the power generation and real estate required to make these facilities run.
So if you step back and look at the board, you have NVIDIA providing the silicon and software architecture, Naver providing the localized operational expertise and training data, and Brookfield providing this just limitless capital pool.
Right.
They're essentially establishing a third axis of global AI power, entirely independent of the major tech hubs in the US and China.
And their ultimate goal is export.
Really? Assuming they conquer the Korean market first.
Yeah, because once Naver successfully proves they can build and scale a sovereign AI factory that caters perfectly to South Korea's cultural and legal framework, they can package that entire methodology.
Oh, wow. As a turnkey solution.
Exactly. The sources point out that this trio is heavily eyeing the Middle East, specifically nations like the UAE and Saudi Arabia, as well as rapidly digitizing economies in Southeast Asia.
Places with lots of capital.
Right. Governments that have the money and the strong desire to maintain digital sovereignty, but they lack the end-to-end technical blueprint. Naver can walk in and say, we have the hardware pipeline, the software integration, and the financing structure ready to go. We'll build your sovereign AI factory just like we built ours.
They aren't just selling the software, they are selling the entire industrialized ecosystem.
Yeah.
It's incredibly ambitious. But, and here is where we have to pivot, because the reality of the public markets is rarely as optimistic as a press release. So what does this all mean for the average investor? Because looking at the sources, Wall Street is actually getting incredibly nervous about this.
They are. It was a stark contrast to the narrative, honestly.
Yeah, I mean, around the time NVIDIA CEO Jensen Huang was finalizing these massive partnerships, NVIDIA's stock actually fell 5%.
Right, temporarily losing its crown as the world's most valuable company to Apple.
Exactly, and if you look at the debt markets, the prices for credit default swaps on NVIDIA, which institutions use to hedge against a company defaulting on its obligations, those prices spiked. The risk desks were clearly getting nervous.
And that nervousness circles around a very specific financial mechanism the analysts are flagging: circular financing.
Okay, explain that.
So Jensen Huang has been hyper-aggressive lately. The reports indicate he signed over $500 billion worth of deals and partnerships in a single month.
$500 billion.
Yes, that includes this billion-dollar stake in Naver, deeper entanglements with the SK Group, and massive financial backstops for hyperscalers like OpenAI. NVIDIA is no longer just a vendor selling chips. They are acting like a sovereign wealth fund, injecting capital directly into the balance sheets of their own customers.
Okay, I have a pushback on the viability of the strategy because this sounds eerily similar to the vendor financing loops we saw during the telecom build-out of the dot-com bubble. Right. If NVIDIA hands Naver $1 billion and Naver uses that newly bolstered balance sheet to turn around and buy $1 billion worth of Blackwell chips, isn't NVIDIA just artificially buying its own products? How much of this demand is actually real?
That is the exact anxiety gripping the market right now. When you blur the lines between strategic investor and primary supplier, you introduce a layer of systemic fragility.
Yeah, no kidding.
Analysts dissecting the Naver deal specifically have pointed to 4 major intertwined risks that highlight why this strategy requires just flawless execution to avoid a collapse.
Okay, let's go through them. The first major vulnerability that jumps out from the Brookfield side of the deal is the nature of the capital itself, right?
Yes, that $9 billion term sheet sounds impressive, but it's preliminary, and it's non-binding.
Meaning they could just walk away.
Exactly. We've seen mega infrastructure projects stall out in the diligence phase before. If the macroeconomic environment shifts, or if AI monetization doesn't happen as fast as Brookfield expects, they could drastically renegotiate those terms, or just walk away entirely, leaving a massive funding crater.
And even if the capital flows perfectly, there's the second point.
Yeah.
The execution risk at the facility level, which is monumental.
Sure.
Scaling GAK Sejong to 200 megawatts by 2028 is a hyper-aggressive timeline. You are relying on the local South Korean municipalities to guarantee an unprecedented and uninterrupted supply of power.
You're relying on flawless construction timelines, too.
Exactly. And you are relying on NVIDIA's own highly constrained supply chain to actually deliver 100,000 GPUs on schedule. If any single variable in that sequence slips, the revenue projections tied to the facility just start to evaporate.
Right. And then there's a third risk, the geographical concentration risk.
Which is tied to the currency, right?
Yep. By taking a massive equity stake directly in Naver, rather than just acting as a vendor, NVIDIA is suddenly tethering a portion of its balance sheet to the specific economic health of South Korea. That billion-dollar stake is priced in Korean won.
Wow.
So it is subject to local regulatory changes, regional geopolitical tensions, and domestic market saturation. A traditional hardware sale offloads all that risk to the buyer. By taking equity, NVIDIA is internalizing it.
And that ties directly back to your point about circular financing, which analysts call the equity for demand risk, the fourth point. The entire ecosystem is becoming deeply interlocked.
Yeah, it's a beautifully synchronized machine when capital expenditure is flowing freely. NVIDIA funds Naver. Naver generates demand for SK Hynix memory chips. SK Hynix partners with NVIDIA on next-generation architectures.
But this raises an important question, right? What happens if a major foundational pillar of this AI boom decides to pull back?
Exactly. If a massive hyperscaler like Meta or Google suddenly looks at their own margins and announces, say, a 20% cut to their AI infrastructure spending next quarter, the cascading effect would be brutal.
Because if independent demand drops, the heavily intertwined vendor-financed ecosystem suddenly looks less like a strategic alliance and more like a house of cards just leaning on itself for support.
Right. It creates a scenario where a localized demand shock can ripple through the equity valuations, the supply chain, and the project financing all at once. The margin for error is incredibly thin.
It's just a fascinating duality. On one hand, we are watching the dawn of a new era of national infrastructure. The days of companies just buying chips off a shelf are completely over.
They really are.
We are moving into an era where nation-states and tech conglomerates are forging these massive sovereign intelligence factories, heavily subsidized and steered by the chipmakers themselves. The stakes are shifting from quarterly enterprise profits to long-term digital sovereignty.
The sheer scale of the capital being deployed to rebuild global computing infrastructure from the ground up is unlike anything we've seen in modern economic history.
It truly is. But as I was combing through the megawatt projections, the stock charts, and the architectural specs for this episode, there was one detail in our sources that felt deeply human and honestly a little bit haunting.
Oh, yeah. What was that?
It's regarding Jensen Huang, the NVIDIA CEO, who is orchestrating this entire global shift. He's been very open in interviews about his personal operating rhythm. He admits he has absolutely no work-life balance. None. He works 7 days a week relentlessly. Even when he is technically off the clock or relaxing, he says his brain is running the business as a continuous background process. He is always optimizing, always calculating. He never truly switches off.
Wow. That's a really revealing insight into the mind designing our technological future.
Yeah.
And it leaves you with a critical final thought to mull over. The architecture of our global sovereign AI future is being single-handedly driven by a man who literally never unplugs and never stops processing. So if the systems we build reflect the minds that create them, are we constructing a global AI ecosystem in that exact same hypervigilant, high-stress, always-on image?
Oh, wow.
And more importantly, what happens when a system engineered for constant acceleration is eventually forced to take a break?
Man, that is a profound question, and it goes way beyond supply chains and stock prices. As these massive AI factories start powering up across the globe, we are going to find out just how resilient this new architecture really is. So thank you for joining us on this deep dive into the business of sovereign AI. Keep questioning the consensus, stay curious about the infrastructure running our world, and we will catch you on the next deep dive.